Zombie apocalypse.
Hello everyone, welcome back to Eco Talks with Sneha Manerikar. In today's session, we'll discuss questions from agriculture finance. So let us start our session with first question. To calculate the economic feasibility of loan proposal, the loan are categorized as A. Short-term and medium-term loans, B. Self-liquidating loan and partially liquidating loans, C. Direct and indirect loans, D. All of the above. Answer is, for economic feasibility of loan proposal, loan are categorized as self-liquidating and partial liquidating loans. Now, these are also self-liquidating credit and non-self-liquidating credit. These are classified on basis of surplus generation of surplus. Now, the self-liquidating loans, it is the loan amount type of loan in which loan amount gets absorbed in the production process in 1 year or production period, and then additional income is generated is sufficient to pay the entire loan amount. Now, example for self-liquidating loan is the crop loan or short-term loans. Like here, whatever loan is taken for a particular crop, that amount of loan will be repaid from by selling of the same crop. So such type of credits or loan are called as self-liquidating loans. Then second type is non-self-liquidating loans. Here, these are the medium-term and long-term loans where the production process is one production process is not sufficient to pay back the loan. So here resources acquired with the borrowed funds are not consumed in production process during the project period. The investment is spread over the period of several years. Example for non-self-liquidating loans is a loan taken for purchase of machineries, tractor, etc. Next question is, which of the following is not the criterion for sanctioning loan by financial institution? A. Gender, B. Size of holding, C. Managerial capacity, D. Caste. Which of the following categories will not be included by the financial institutions while giving the loan or sanctioning the loan for an individual? Answer is gender. Gender is not considered. The size of holding of the farmer. If a large farmer is there, he will get the larger amount of money because his repaying capacity will be more. Also, with the managerial capacity. The managerial capacity of farmers should be the more. And in some cases, some type of loans, the caste is considered. Like example of d.I.R scheme, where for lower section of caste or a backward section will be given more priority while lending. So in such cases, caste will be considered, but gender is not the criterion for sanctioning the loan. Next question is, which of the following sequence is the correct regarding jurisdiction of banks? That is area of operation. We have to arrange the different cooperative banks or societies given here according to area of operation from larger to smaller one. Now option is A. PACS, then RRB, then LAMPS, B. LAMPS greater than RRB, greater than PACS, C. RRB greater than LAMPS, greater than PACS, D. None of the above. Answer is C. RRB greater than LAMPS, greater than PACS. RRB is nothing but regional rural bank. The area of operation for RRB is to the region comprising of two or more contiguous districts. That is, two or more adjoint districts are the area of operation for regional rural bank. Whereas LAMPS is a large area multi-purpose society. Here it is found for a compact area having population of 10,000 approximately, and majority of whom should be the tribals. Here the area of operation for LAMPS is greater than a taluka but lesser than the district. So RRB's area of operation is greater than LAMPS, and PLCS, that is Primary Agriculture Credit Society, it will operate at the village level. So it is the lowest ground level or grassroots level of operation is done by the Primary Agriculture Credit Society. So area of operation largest will be for RRB, then for LAMPS, and then PACS. Next question is, which of the following is not the 5 C's of credit? A. Character, B. Capacity, C. Cost, D. Capital. Now, there are 5 C's of credit. That is, which are the 5 important C's which are for credit are considered while giving the loans by the financial institution. So which of the following is not the among the 5 C's we have to identify? Answer is cost. Cost is not among the 5 C's of credit. So which are the 5 C's of credit? First one is character, second capacity, third capital, fourth condition, and fifth common sense. Now character refers to the moral as well as the mental character of the borrowers, which will be examined by the financial institution before sanctioning of loan. Now for the basis of any credit transaction is trust. Bank gives you the loan for a borrower just on the trust because they trust the borrower. So what are the moral characteristics of borrower? Honesty, integrity, commitment, hard work, and promptness. These are the moral characteristics, and also his mental characteristics will be examined. This is about the character. Second is the capacity. Capacity refers to repayment ability of the borrower, whether the income obtained from the farm is sufficient to pay back the loan taken by him. So this will be checked in the by considering the capacity. Third one is capital. Capital indicates availability of money with the farmer borrower. When his capacity and character are proved to be inadequate, capital will be considered. Thus, then it represents to the net worth. If the farmer is in profit or he is able to earn possible amount so that he can pay back the loan, then it is related with the capital, that is repayment capacity and risk bearing ability of farmer borrower is considered here. Then fourth is the condition. It refers to condition needed for obtaining loan from financial institution, that is procedure to be followed while advancing loans. That is the conditions, that is what are the terms and conditions put forward by the financial institution. And fifth one is the common sense. This relates to perfect understanding between the lender and the borrower in credit transaction. This is the fifth C of credit, that is common sense. Next question is, the financial progress being made in farm business from 1 year to next year is best shown by change in A. Total assets, B. Cash available, C. Liabilities, D. Net worth. Answer is net worth. Net worth will help the farmer to identify his financial progress made from 1 year to next year. Now, total assets refers to all the physical assets that is with the farmer. Cash available is the liquid cash available, and liabilities are the loans or amount payable to others. Those are called as liabilities, and net worth is nothing but the total assets minus liabilities. Now, balance sheet is one of to calculate net worth. We use balance sheet. It is also called as net worth statement. Now, balance sheet is one of the three fundamental financial statements. Three fundamental financial statements are balance sheet, income and expenditure account, and profit and loss account. These three are the three fundamental financial statements. Then, what does the balance sheet displays? It displays the total assets as well as the liability. Now, if assets is equal to liabilities plus equity, that is nothing but assets minus liability is equal to equity, that is the profit made by the business. Now, suppose if liability is more than assets, that means the farmer is incurring loss. If assets are more than liabilities, farmer is gaining from his business. Next question is, which of the following serve as refinancing agency? A. MARKFED, B. RRB, C. RBI, D. APCOBARD. Answer is RRB. In the given options, RBI is the refinancing agency. MARKFED relates to Marketing Federation. It is not it not serves the refinancing as a refinancing agency, but it helps in marketing. It is the state level body. Then our regional rural bank, it is the financing agency, not the refinance, because it directly lends to the farmer. Whereas RBI is the refinancing agency because it lends money to the banks, and in turn bank will give as the loan to the farmers or the customers. And APCOBARD is Andhra Pradesh Cooperative Bank. So these are in this given option, RBI will be the refinancing agency. Now, RBI was established on 1st April 1935 under the RBI Act 1934. So the three functions of RBI are provision of finance, promotional activities, and regulatory functions. And the provision of finance, the refinancing function comes. Next question is, risk in farm business increases when a farmer insures the crop, b. proportion of equity funds increases, c. proportion of non-equity funds decreases, d. none of the above. So what are the reasons for risk in farm business? Answer is none of the stated reasons are the reasons for risk in farm business. If farmer insures the crop, risk in the farm business decreases. If the proportion of equity fund nothing but the profit funds increases, there is no risk. And non-equity funds are refers to the loans taken. If loans are decreasing, then there is no risk in farm business. Then what are the reasons for risk in farm business? First one is the nature. Natural calamities or heavy rainfall, flood, drought, such or any insect attack. These are a price fall, government change policy. These are the reasons for increase in the risk in farm business. And here stated reasons are not the reason for increase in risk business. They are the reasons for decreasing the risk in the farm business. Next question is, rate of interest charged under DIR scheme is A 1%, B 4%, C 2%, D 6%. Answer is 4%. Rate of interest charged under DIR scheme is 4%. Differential rate of interest scheme. Here this we have discussed in details about DIR scheme in the previous video of finance. So the 4% is the rate of interest charged under the DIR scheme. Next question is, which of the following helps in checking the duplication of financing? A. DIR approach, B. SSA, C. Nationalization of commercial bank, D. SWS. So checking of duplication of financing is taking loans 2 times or taking from benefits from both the banks or more than 2 banks. Which approach will help in checking of this duplication of financing? Answer is SSA. SSA is nothing but service area approach. Now, this service area approach has come with the objective of increasing the production, enhancing productivity of resources, and raising the income of rural population. To meet these objectives, RBI advised the Chief Executive of Public Sector Banks to carry out the personal visits in rural areas and conduct the survey, like what are the defects in the loan disbursement. So with the suggestions of these chief executives, Government of India had held a seminar in 1988. And on this seminar, they decided to launch the service area approach. So it has commenced from April 1st, 1989. Then what is the service area approach? Here, each rural and semi-urban branch of commercial banks, including the RRB, will be assigned a designated area in which that bank has to plan the efforts towards the development in coordination with all extension and development agencies of the state. The particular bank or branch should take the full responsibility of designated area where all development activities should take place, and they should develop the relationship between the area and also the state government. So what are the stages in implementing of service area approach? First step was the identification of service area for each bank branch. And second was the survey of villages in the service area. After selection of banks, those banks were conducting surveys in the village area. Third was the preparation of credit plan on annual basis for service area by each branch. Fourth, coordination between credit institutions and development agency. Fifth was implementation of credit plans. And sixth, continuous system of monitoring the progress in implementation of plan. And last one was the individual schemes. These are the stages of implementing of service area approach. Next question is, crop insurance given to farmers represent A. short-term loan, B. medium-term loan, C. DIR loan, D. compensation. The crop insurance given to farmers, it represents the compensation. It is the compensation for the loss incurred by the farmers. It does not have, crop insurance has not connection with the loans given to farmer. Next question is, LDBs fall under the category of A. cooperative banks, B. commercial banks, C. NBFI, D. all of the above. LDB means land development banks. These will fall under the category of cooperative banks. So we have seen here as a cooperative credit organization, there are three tier system and two tier system. For short term and medium term loans, there is three tier system, which involves state cooperative banks at state level, district cooperative banks at district level, and primary agriculture cooperative societies at village level. Whereas long term loans is two tier. The central land development bank, which is at state level, and primary land development banks is under the taluka level. So these land development banks comes under the cooperative system. Next question is, a farmer has retired and is planning to rent his 50 acres to the neighbor for cash rent. Which factor should he consider when arriving the fair cash rent figure per acre? A. Interest on investment, taxes and profit. B. Interest on investment per acre. C. Prices of crop raised. D. Neighbor cost of production per acre. So if farmer is planning to rent his land for cash, then what factors he should consider while arriving at to decide the fair cash rent? Answer is investment on interest on investment per acre. This is the criteria which farmer consider before deciding the rent for his land. Next is as example of hypothecated key loan: A. Agriculture produce, B. Tractor, C. Land, D. LIC bonds. The answer is hypothecated key loans example is agriculture produce. Hypothecated loans are classified as key loans and open loans. In key loans, it refers to agriculture produce of farmer will be kept under the control of lending institution and loan will be advanced to the farmer. This helps the farmer from not resorting the distress sale. So example for key loan is agriculture produce. Next question is example for security under chattel loans: A. Agriculture produce, B. Tractor, C. Gold ornaments, D. LIC bond. Under the chattel loans, what will be kept as security by the borrower? Answer is ornamental gold or gold ornaments. The chattel loans are the credit obtained by pawnbrokers against the pledging movable properties. Now, which are the movable properties? Jewelry, utensils made of various metals or precious metals. So these are on this the borrowers take the loan. So such are called as chattel loans. Next question is, at the end of the year, farmer owes rupees 5,000 to local pesticide dealer. It would be shown in farmer's balance sheet as A. Prepaid expenses, B. An account receivable, C. An account payable, D. An asset. Answer is account payable. And in balance sheet or net worth statement, amount which a farmer has to pay to someone else or he owes to others, that will be coming under the account payable, and the amount which farmer is expecting to receive or the amount which he has to still receive by, for the commodity he has sold, that will come under the account receivable. Account payable is a liability due to a particular creditor when it orders goods or services without paying in cash, which means that you have brought goods on credit. Such factors will come under the accounts payable. That's all for today's session. If you have any doubts, you can message me on my Telegram group EcoTalks or ask your doubts in the comment section. Don't forget to like, share and subscribe. Thank you.